Welcome back to Wealth-ology. For today's video, we will be going to talk about the 5 stocks to buy in the 2022 stock market crash. Let's get started. As Warren Buffett says, whether we are talking about stocks or stocks, I like buying quality merchandise when it is marked down. There is no better moment to mark down stocks than in the year 2020. When prices have completely collapsed, I'm going to discuss the 5 stocks that give excellent possibilities to buy during the current market drop in this video. So let's get started. Stocks number 1. Apple. Ticker symbol AAPL. The largest investments in Warren Buffett's complete portfolio. As you can see, Apple has lost more than 30% of its value since the market meltdown. The company is called Apple. Apple's stock price has fallen significantly after reaching an all-time high of over $327. Although this is a terrific chance and has brought the PE ratio down to a good level at 18:2, it will probably continue to decline, at least in the immediate term. Additionally, as the price has decreased, the dividend yield has increased and is at 12.6%. Now that you are aware of this trend, we may average down our position as the price continues to decline. We now need to accept that Apple's business model will be successful in the upcoming years. Regardless of what happens, people will continue to use their phones. Let's face it, people's lives these days revolve almost entirely on their phones. This means that the primary source of income for Apple will be fine in the long run. The same is true for the iPad and MacBook. Consumers will continue to use those devices and the related services, which will work just fine. Stock number 2. Delta Airlines. Ticker symbol DAL. Since nobody wants to travel anywhere, airline businesses are essentially taking the brunt of the 2020 stock market crash. In fact, we aren't even permitted to travel any place, which has put a stop to the growth of the tourism industry and affected the stocks of these corporations even more. If you look at this graph, it appears as though the line has fallen off a cliff because it is 65% below its peak. Additionally, we recently learned that Delta has stopped paying dividends and buybacks, so you might want to hold off on investing in this stock for a little while. Within the next few weeks, the price will decrease even further. Therefore, why do I still favor the stock after its crash? First, let's consider the long term. Specifically whether or not people will still be traveling and flying in 3 to 5 years. The business concept is good. It just isn't fine when there is essentially a global shutdown. Second, even if things do turn out to be extremely horrible, the government will intervene even as they discuss a possible $50 billion bailout for airline corporations, and President Donald Trump has stated that he is supporting them. We're going to back the airlines 100%. We have to back the airlines. It's not their fault. Stock number 3. PepsiCo. Ticker symbol PEP. Now is an excellent moment to consider purchasing high-quality companies, given the current state of the market. One of those that we can discuss is a stock named PepsiCo, with the ticker symbol PEP. There are 3 reasons why we like the stock. Our food and beverage firm PepsiCo own other billion-dollar businesses in addition to the Pepsi brand. People will still need to eat even if the market is collapsing because they need food and drink. Second, PepsiCo's dividend payout has not raised for 48 years in a row, making them nearly the definition of a dividend king and one of the safest dividend stocks to invest in. Pepsi has consistently increased its dividend to shareholders despite market downturns and recessions. This gets us to the 3rd reason why we prefer PepsiCo. The recent price drop. Currently, the dividend yield is not awful for something reliable. It is trading at $3.82, giving it a dividend yield of 3.26%. Yes, we should interpret stock price declines as a price sale rather than a crash. Since they are currently roughly 30% lower than where they were at the beginning of the year, now is not the worst moment to purchase this reliable dividend investment. Stock number 4. Amazon. Ticker symbol AMZN. Let's stick with the idea of seeking to acquire reputable businesses for the long term when they're affordable. When it comes to quality, Amazon is one such firm that is quite difficult to match. Amazon is a corporation with a great business plan. and they undoubtedly make good money from their subscription service for streaming music and video, Amazon Prime, and their AWS cloud computing platform, which has surpassed competitors like Microsoft, Google, and everyone else. Since everything is now done online, because it's so much simpler, their e-commerce part is of course their most significant. As a result, Amazon's income is simply increasing at a compound annual growth rate as e-commerce takes over, and Amazon is the king of e-commerce. When we look at the price of Amazon, it actually hasn't fallen by as much as most stocks. Thus, the revenue of $280 billion in 2019 will only increase. It has decreased, but not as significantly as other things. As a result, we might want to hold off on buying the stock until the data improve a little. We can wait for the price to decrease as the 2020 crash gets worse before purchasing this business for the long term. Stock number 5. Berkshire Hathaway. Ticker symbol BRK.B. One of the best businesses ever is the last stock there to make this list. It's Berkshire Hathaway, the investment company founded by Warren Buffett. There is a company called Berkshire Hathaway that owns a variety of top-notch stocks and companies picked by Warren Buffett, possibly the greatest investor of all time. Coca-Cola, Apple, Geico, and Duracell are just a few of incredible companies in this list. Warren Buffett is a seasoned investor. He had been steadily accumulating a sizable cash position for years, and everyone felt he was foolish to do so. They believe he had lost his touch, but he was only watching the stock market for a chance. He was watching for sales, planning his strategy wisely because clearly money is required to purchase those sales, which Buffett has amassed in excess of $100 billion. One of the large corporations that will benefit the most over in the long run from the stock market meltdown is this one. Because of Buffett's caution and the fact that Berkshire Hathaway is currently down about 25% at the time this video was made, it seems unlikely that it will become any cheaper. Which aspect of this subject have you found to be very useful? Please let me know in the comment section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video. Bye!